Yours has been an interesting path because now with Musa Capital, I see it as and I saw you describe yourself as a boutique merchant bank.
Correct.
Well, that's a sexy terminology, boutique.
It's sexy, but in reality, what it means is that we solve problems. And we solve problems by taking the experience that we have that's really been honed in the developed world, in the United States, and bringing it to Africa. And in that way, and our philosophy is very much, when we made that transition, was to bring a holistic investment philosophy in such a way that we would make money for ourselves, make money for our investors, but also embrace and uplift the community and the base of the pyramid consumers in which we're trying to address. Musa Capital was founded in 1995 by three African Americans who had a vision. And a vision really that has refined along the way, but their original vision was mobile telephony is non-existent in Africa. Penetration rates were almost nothing. What if this is an opportune time to acquire some licenses and ride the growth of the mobile telephony that has been experienced in Latin America and in Asia?
Is it African banking for Africans, or do you encompass everybody?
We encompass everybody, but we serve a much larger portion population than just Africans. For example, incoming multinationals who are looking for African investments, we serve them. African governments, we serve them. African corporates and small, medium enterprises, we serve them. So our focus is definitely Africa, but we also receive incoming inquiries from multinationals around the world. Tony, there are two parts of our business. There's strictly an advisory business and there's an investment business. On the investment side, which is where we want to be transformative and invest in industries and sectors that will promote sustainable financial returns as well as the upliftment of the base of the pyramid consumers. That's another areas where we focus.
In the manifesto that you put out, your advertising blurb says that there was a first funding and a second funding.
That's correct.
Now, can you explain that first and second funding? Because I've never heard of a description quite like that.
Private equity funds are usually fixed terms, usually 10 years. And so our first fund, which was launched in 1996, had a life of 10 years, and we exited those investments between year 7 and year 9. And after that, the capital is returned to the investors as well as whatever profits we make with a share for ourselves. The second fund, which is currently in its seventh year of its useful life, was launched in 2008. And so that is coming close to its useful life. We're exiting those investments.
Are you already talking to a third funder?
Yes, we are.
Then to do that, you must have a business philosophy.
Yes, we do.
And you've sold that business philosophy to 1, 2, now 3. Has that philosophy changed from 1 to 3?
It changed from 1 to 2. In one, it was principally about finding the right sectors and finding the right partners. That was it. And early stages of African private equity. Fund 2, which is going to be the same as with Fund 3, it's about close proximity to your portfolio companies. It's about focused sectors. For us, affordable housing, agribusiness, financial services, things that we know and have done very well in Fund 2. It's about the asset class, a combination, not just private equity, but also mezzanine and other debt structures.
Let's move on a little bit now to a different area that fascinated me because it's close to my heart, obviously, is the agricultural field.
Sure.
And I see that you've got very involved throughout Africa in the agricultural field. In what way have you contributed towards the agroeconomics?
We look at it from very much as a value chain perspective. For us, farming in itself is not a viable investment opportunity. Farming is a is a requirement for the value chain, and in such a way that it feeds the procurement, it feeds the processing business, and it feeds ultimately the retail.
Food security in a nutshell.
Yeah. Exactly. And we all know that Africa is in a huge deficit, regardless of which country you talk about. Huge deficit. We're importing food, and 60% plus of our populations are based in some way regards to agriculture. So our approach has been to start with the retail side, because you always want to find a way, where's the product going to end up? Unlike the United States, Tony, you talked about the comparisons. In the United States, probably 70% of the food that's wasted is wasted by consumers after they've bought it from the retailer. In Africa, 70% gets wasted right from the farm because the infrastructure is so poor, the storage is so poor, that even if they can produce the most fantastic tomatoes, half of it is going to rot before they get it to the store and they get paid.
Yeah.
And what we need to fix is the value chain and their access to the retailer and the margins that the retailer is benefiting from in order to make the farmer sustainable. If we're going to address food security, which is one of our core objectives, one, we need to put more of the potential agricultural land into production. So that means communal land, it means land owned by government that is sitting not producing at the moment. And that means we have to have partnerships with private sector and public sector. The second reason, we have to invest in infrastructure in such a way that when we have production, we can store it and smooth out those vagrancies of the market. We're not traders. None of the founders of this business, they're all advisors. And as you know, the different characters, traits in both between traders and investment bankers. So we look at smoothing out the price volatility. And that's one of the reasons that one of the companies that we in our portfolio, African Frontier, which owns a number of SPAR retailers and it was one of the largest procurement of fresh fruit and vegetables, is now looking backward integrating into primary production. Because rather than go out and search the market for apples off-season and pay peak prices, we can produce some of our own. And so there's a strategy where we want to get to 30% of our supply needs from our own farms.
Coming from America, which is a philanthropic, I put that in inverted commas, society,
Yeah.
should there not be some philanthropic investment in here if you're to take out? Because you can't take out without putting in somewhere.
Yeah.
Now, where do we point the merchant banks and the banks in this country to access that philanthropic attitude?
You know, Tony, the philanthropic attitude comes, in my mind, the banks are all getting a lot of pressure. If you go around and talk to the agricultural groups in the banks, they're all under a lot of pressure to produce. And so they're going out looking at ways in which to extend financing. But they can't solve the problem on their own because they're extending financing to someone who has no market access. And the banks have no control over market access. We, however, as investors, because we control various portions of the value chain, can do that. Now, what we do is we incorporate some of that philanthropic element into our models because the emerging farmer gets access to lower cost financing than the commercial farmer does. They get preferential rates in terms of inputs, fertilizers, seeds, etc. And in such a way, some of that philanthropic, because we're not going after the jugular in terms of returns, we are looking for sustainable returns. Our target return is 20% net for our funds. And we can do that very comfortably by investing across the value chain, understanding that a combination of the commercial and the emerging farmers will balance themselves out and give us that return while still producing a positive impact in terms of the development. The amount of time that government has been spending in the last 12 to 24 months on agriculture alone is significant. Now, they haven't gotten it right. They spend a lot of money, and they're still trying to find the right mix, which is different. For example, if you take Nigeria, the Nigerian agricultural minister is probably one of the most dynamic speakers and effective ministers on the continent as far as agriculture is concerned. And his philosophy is very simple. He is not in agriculture to create jobs. He's in agriculture to create businesses. And out of the businesses will come jobs. And as a result, investment has flown into Nigerian agriculture in huge measure.
Isn't the greatest gift that one can bestow upon somebody education? Understanding, knowledge. There's no compensation for that.
Yeah.
So really when we were talking about philanthropic ideas and attitudes, here's a gap that merchant banks and banks can take. Education. They can put together packages which they can give to the aspiring farmer to teach him how to husbandry, how to look after his books, how to buy, how to sell. But they're not doing that at the moment. So maybe this is a gap that could be taken. We're in an electronic era, so it could be done. We're doing an interview that's going on to a magazine. They read, both parties read these magazines. We're setting and sowing a seed.
Tony, you're absolutely right. And the banks are not doing it, and perhaps different parts of the banks are not speaking to each other, because in every single bank you have corporate social responsibility. But then if they spent a few hours a month, maybe even a year, just talking to their counterparts in the agricultural sector, they could find ways to spend the money very easily. In our structure, and maybe because we come at this with the holistic philosophy, it's not just about production, it's about education. So in each of the areas in which we are looking to invest, and in the farms we're willing to either buy or establish, there is an educational element, in a community where, almost like a university. One of the great things about Zimbabwe in terms of its agricultural setup is that almost every town you go to, there's an agricultural college of some kind. You drive around and there's one agricultural college after another. And that has extended the depth of the experience in agriculture. And we need some of that in South Africa.
So how do you see your future here as Musa Capital?
Musa Capital has never been defined as a country-specific entity. Our focus was to be the best boutique, as you said, merchant bank on the continent. And really, when we defined that, we didn't say the best African. We said the best boutique for a reason. We want to be associated with the quality and the level of expertise that you would associate with JP Morgan, Goldman Sachs, or any other world standard that you would put in that grouping. And so we realized that to do that and to be effective on the continent further north, we have to have a platform, a regional platform. And so what we've done is establish partnerships in Tanzania, in Botswana, in Ghana, and ultimately soon to be in Nigeria, where we have a physical presence and are able to be part of the local fabric, but also benefit from the regional platform and the base that we have here in South Africa.